Thank you. Well, thank you everyone for inviting me in here. I know, insurance can definitely be one of the more exciting topics. And so we'll try not to put you to sleep here mid-afternoon after lunch. But, I always like to wonder, how often are you looking for a product or service and you can't seem to find the answers that you're looking for? Why is that? And with insurance, you might hear me or my fellow colleagues say things like, well, it really depends on this or that. We need you to reach out for a quote. But do you feel like you've gotten any answers that you're really looking for at that point? Most people share no. And so what we're trying to do is demystify this insurance aspect and teach consumers how to navigate this a little bit more easily. And in our time today, we're going to break down exactly what factors impact the cost of your insurance, what some things are that you can keep an eye out for when you meet with your agent next, and really any considerations that may pop up. So we'll have a question and answer at the end, but if there's something that comes to mind in the middle, please let me know and we'll be sure to address it. So my goal isn't to convert you all to insurance agents today. It's really to arm you with more information so you can be more informed on your insurance making decisions. So Kim, our marketing specialist here, she did provide a little packet which will help just walk through what we're going to cover today at a high level. You can make some notes if you need to along the way. And like I said, stop me if there's any questions that you might have. So does that sound fair? All right. Well, one of the things that we're going to take a look at today is really understanding the what's driving our costs. We're all experiencing inflation in a number of ways. Insurance isn't insulated from that. So we're going to talk a little bit about what's really driving that. Next is, what are some practical solutions that you can do to reduce those costs? It's a complicated equation sometimes. And so we want to give you a couple tips to walk away here from. And then learning a little bit about some of the appropriate coverages that you can choose to protect yourself. Now, as Doug had shared, I am a third generation now in the agency, and I initially had tried to run from insurance upon graduating high school. And after a couple of weeks at school, I thought I wanted to be a history teacher. And a couple of weeks in, I went and got licensed in insurance. And in between classes, I was going door to door in Mount Pleasant, trying to sell professional liability to attorneys. I learned a lot along the way, and ultimately it pushed me into our family business here. So I just recently this year welcomed possibly the fourth generation in our agency. That was exciting news. This is maybe our fourth generation, Sophie, and so we don't know if insurance is in her blood, but it was certainly in mine. And the future, I guess, is open here. So with that, we'll go ahead and jump into why are these rates going up now. Has anyone received their insurance renewal documents recently? Are we seeing price increases? And probably rather significant, right? I always tell people I'm a consumer first, and I feel that as well. We've seen 20+% increases every year for the last 3 years. And so I want to share some of those tactics that we can use to reduce that. But excuse me, what's driving butter down the wrong pipe? Sorry. Well, first of all, inflation. We're seeing repair costs are through the roof right now. Building materials much higher than we've ever seen in the last 3 years, 4 years. 2020 did something very unique to our construction and building costs. We saw those prices skyrocket, but we also saw labor shortages, and it hasn't leveled out in most areas. And so what used to be maybe $80 to $150 a square foot, some areas of the state we're seeing $200, $400, $500 a square foot for replacing a home. And all of that impacts the way insurance companies had originally calculated their way to pay out claims. So that's one of the first areas. But in Michigan, we always feel like we're pretty well insulated from hurricanes the mass tornadoes. We don't see some of those major weather events that you would in other parts of the country. But last year, we definitely saw an increase in high winds and hail that hit mostly the southern part of Michigan. But I think we had 6 or 7 major hailstorms that did significant damage. And why that is important here is all of those companies that are insuring here in Michigan, they got hit, and we're losing 10 to 30 cents on every dollar last year. And so ultimately that pushes our rates up here in northern Michigan up to cover losses from around the state. Another area that we're seeing is we live in a really litigious society, right? Whether it's those lawsuits that you might see on the news where hot coffee was spilled on your lap, those are the kind of the goofy ones that you hear. But the reality is this ties up resources in courts, and in most cases, an insurance company is going to be defending those types of lawsuits. Ultimately, us as consumers, we again get squeezed from that type of litigation. And then we were just talking about this earlier with the advancement of technology, how fast it's changing year to year. Our vehicles, the cost to repair these are increasing very drastically. You take a windshield, for example. Windshield, you used to be able to replace that for a couple $100s. Now we're seeing with the technology that's built into them, it can go anywhere from $1,500 to $2,500. And that's coverage that insurance companies provide typically for about $30 to $50 a year for full glass replacement. And all of a sudden, they've quadrupled their costs. And so all of these small factors around the replacement, the repair is really disrupting our supply chain. We saw whether it were the chips from China over the last couple of years, or other building materials that are difficult or more costly to get up here. Those are all causing disruptions throughout the insurance supply chain. So how can we address that? I mean, that's all fine. It sounds more like lip service to me. And so really, we want to find ways to how can we drive those costs down? One of the first ways is with a deductible. Now, when I first started in the industry, it was about 18 years ago. And the standard deductible that I saw on a homeowner's policy was about $500. $250 was also pretty common. Over the years, that's grown now to $1,000. And recently, most companies have, I don't know if anyone's experienced this, but most companies have forced that up to $2,500. Has anyone had their deductibles increased without their desire? Not yet. Well, that's good so far. But one of the things I want to talk about is the huge cost that can actually help put money back in your pocket up front. So if you're not having claims regularly or at all, carrying a $500 deductible, you may be lending the insurance company money year after year for nothing. And my theory is I'd rather not give the insurance company any more money than you need to, right? And an example, I had mentioned my homeowners increased 23% this last year. It was close to 30% the year before. And so I started to increase my deductible, and it saved $300 or $400 each year. And the way I look at it is I hadn't turned in a claim. I had some small things happen that could have been a claim, but you start to manage that because it was just over that threshold. And I looked at it, if I haven't turned a claim in the last 8 years at this house, I should take advantage of these savings. If I can make up for that, it can be 10 to 20% savings on your homeowners by increasing your deductibles. And do we have any questions yet so far?
I just want to comment that the noise we're hearing in here of water running is because they're working on the building. And
I wanted to make sure we weren't about to have.
water's running. That's what's going on.
There we go. I just needed to make sure I'm not about to be rained down on here. Maybe somebody missed lunch. I don't know. Well, so that's one of the, oh, yes.
Schedule and what we should.
Absolutely. And so the question was what we'll schedule on a homeowner's policy. Is that correct? Yes. We'll get to that point here in just a second and kind of navigate around that as well. the next option is your payment. So how you're making payments can make a big difference with the insurance company. Let's say how many people have gone to the store, and if you're using a card, debit or credit, you see $3 or $5 charges, or maybe a 3% surcharge. Insurance companies have now been catching up to that as well. And because of the fees passed down from credit card companies, they are now charging and passing those fees on to the consumer as well. And so if you can go onto a monthly automatic payment from a checking account, typically there's no fees associated with that. If you can afford and budget to pay on a semi-annual or annual basis, that will also typically give you a big premium reduction. And so one of the examples that I'd used with somebody before is, you look at the interest rate you might have on a credit card, and everyone's finances are a little bit different, but if you can pay that premium in full and save $300 or $400 and make a couple monthly payments on that credit card, you've won that game against the insurance premiums and the costs. Next is multi-policy, combining, bundling, whatever commercials you might hear online or on the TV. But I mean, everyone's heard bundle, I think, over and over again, right? But it doesn't cease to amaze me how often we see, a home here and an auto here. And by the time you stack those policies together with one company, you can really start to make savings where they might be 10 to 15% on a multi-policy discount. So that's something to always explore. Now, it doesn't mean that you necessarily have the best coverage or options that way, but always something to consider along the way. And then another one that seems to get missed is making sure that you have the best group discount. So every company has a different list of groups that they will give a discount for, whether it's AARP, retirees or education association, maybe a chamber of commerce or fraternal organization. So making sure that you speak with your agent about updating both an insurance score and your group discounts may make a big difference. So we'll get to the schedules here in just a second. When you're looking at your home, oh, sure.
Oh, you're saying that you could have an insurance policy through you, but if you're a member of the Chamber of Commerce or AARP, then that would entitle you possibly to a discount.
Exactly. The question was if you have a policy and you have a group discount or a group membership somewhere else, if that would entitle you to a discount. And it certainly will. And it just depends on the company that you're with. So those companies, they try to find their competitive advantage, and groups are one of the ways that they can do that. Exactly. That's a great example.
But all.
Well, maybe we need a lobbyist to get that into the insurance companies here. But you'd be amazed. Like I said, AARP is a good one. Even just a retiree organization, any organization. So companies can be very generous with that. Some are very strict. So it really is a case-by-case basis. And like I said, you'll hear insurance agents say, well, it really depends. Unfortunately, this is the way they've designed the system. It really does depend. Now, when we look at the home, we talked a little bit about our inflated costs for building materials. This is one of the areas that we're starting to catch up on, but unfortunately what we've seen is if you have your homeowner's policy on an automatic renewal and you're not having a conversation with your agent, then this could easily fall behind where you should be for replacement cost. And oftentimes we might get a question where, well, my house isn't even worth that. And while the market value might not be there, let's say you have a fire or tornadoes. I always like to use fire because it's the easiest for us to envision an absolute loss. But if we have to rebuild that home from the ground up, your market value most likely won't cover that. And we saw a big example of this not only in the last couple of years, but in the housing bubble crisis. That was one of the areas where we saw people buying houses at a significantly discounted rate, and the replacement cost was double or more what the market value was. So an accurate home valuation is definitely something to be aware of. And you don't want to get caught behind the 8 ball with to maybe save $5 or $10 on an annual basis. So we like to make sure that we try to get that, right on with, and depending on the part of the state or area that you're in, it might make a difference. Yeah.
But, if the market value is X, wouldn't you recommend that you have that much insurance on mortgage? And so with that said, in the case of the market bubble, when homes were selling for 50 cents on the dollar, you're implying that those people insured it for 50 cents on the dollar instead of what the cost gets paid.
Exactly. And that's a great point. And, really, when we look at that market value, you're also typically including the land that you're on, right? And so from an insurance standpoint, we don't really care about the land that you're on. It's the structures themselves. So making sure that we find that balance there between what it'll truly cost.
Do you provide that analysis of the reconstruction value cost?
Yes, the question was if we provide the replacement cost estimation. We do. Here's a caveat that we see, unfortunately, in the insurance industry is the software that we use on the agency or company side to help estimate that cost. We're not contractors, so we rely on these tools to help us. Unfortunately, they sometimes can lag 6 months to 12 months behind what the true market is. Or in some cases, like I said, depending on the parts of the state you're in that are insulated in an area where building costs have stayed elevated and they don't seem to be coming back down right now. And so what we do is we use that as a starting point, and most agents will do the same. You'll have, here's what is the minimum to recommend, but my personal preference is I like to bump mine up a little bit more because I think, if something happens, I don't want to fall $20,000 or $50,000 short for pennies on the dollar. Yes.
Is it clear in the policy that you are choosing the replacement cost? In other words, does it say replacement cost, or if you're taking market value, does it say market value, or do they use other terms that are a little vague?
Yes. So that's another great question. And on your policy declarations page, you will see where they'll say replacement cost next to it, or rather than market value, they'll typically say actual cash value. So that will factor in depreciation under that.
They do use replacement as opposed to, and an actual cost value is what they use for the other.
Exactly. Yes.
But don't you have to pay more to get replacement costs?
You do. And like anything, it's a pay to play. And so if you're looking at comparisons there, and especially when it comes to a home, I live in a house that is 135 years old. If I were to take the actual cash value of that home, I'd be left with rubble at the end of a claim, I think. And so when we look at the replacement costs of older homes pre-1940 compared to today, those reconstruction costs are much higher than a home built 20 years ago. And just because of the quality of materials, you look at the trusses in there alone, everything is much more solid and sound than the standard home construction. But certainly to go to replacement cost, you're going to pay a little bit more.
What does depreciation come into play? Is that when you're talking cash value, or would there be any consideration for depreciation when you have cost replacement policy?
The question was when depreciation comes into play, and it is on actual cash value. So it's interesting in Michigan, there's not clear court cases on this yet of how they actually determine actual cash value. But as a whole in the insurance industry, they really look at it market value less depreciation for a simplified equation of it.
That's
Depreciation. Yes.
139 years ago,
Mhm.
shouldn't be worth a whole lot.
Mhm.
So what happens when your house burns down?
I would be left with maybe a small envelope of cash and not much else there to rebuild. So if I have a replacement cost, so an example here for me is, it might be $500,000 replacement cost for that. So they're going to build it in like kind with the materials that are available to fully replace that home. No depreciation penalty or anything like that.
But up to whatever your replacement cost is there any depreciation on that amount?
There is. Okay. So, and that's really what we try to encourage is to go with replacement costs. So certainly there is going to be a higher premium charge for that compared to an actual cash value, simply because the amount of risk you're shifting to the insurance company. Does that all make sense? Have I hit that one? Thank you. Now, the next piece is the proper coverage on your valuables. So when you schedule things on your homeowner's policy, and the types of items that you might see, these are items that either maybe are on the move often, or I think about jewelry or art, things that are difficult to put a value on. We might need an appraisal. So collectibles and art are good examples, because how do you put a value on that? It's what might be worth millions to one person is $20 to me, and so what we're trying to do is, when you have those types of items to schedule, you're going to need an appraisal to support that value. But that's really the best way to have it done, because like we talked about with the actual cash value and depreciation here, if you don't schedule art, for instance, on your policy and you have a fire, they're going to look at that piece of art and replace it with something very similar. And it could be a priceless piece of art. And so those are always areas that might get overlooked. Firearms are another good example. People have large collections of firearms, and some of these can be thousands and thousands of dollars, whether they're collector items or just simply a nice firearm. So those are all good considerations to keep in mind. Yes.
One is that collectibles, art, or say coins or guns. Well, the market's fluctuating. So I take that in. I have to pay for an assessment to you. Well, if I did it at a time in which the market was high, I would get a higher assessed value. What happens if something happens to that 5 years later and the market happens to be down? What do you say at home? Right? So how does that work? That's
And those are great points. So when it comes to claim time, something like that really vary company to company of how they want to pay that. Some may honor the that you. Others will look at the current market.
I see, and that's my second thing. Just like you're saying, increase your deductible to bring your premium down. Well, incentive to me to go get it assessed or give you that information. Well, something happened that you would say, oh, that's filed in, made in 1943 or whatever. So it's worth this in today's market. So I could be paying an inflated insurance premium all those years only to have the market fall and get minimal reimbursement. So we're numbers.
And so you might be stealing the point a little later and say, no, I'm kidding. But that's one of the importance, one of the most important parts about a regular policy review are things like that can quickly shift. Another example, whether it's collectibles or not, we've got a lot of clients that have those electric bikes, for instance. Well, at the first purchase, they might be $5,000, $8,000, $10,000, but again, as we start to appreciate it, and so it really boils down to the policy language itself. And I always say that it's the policy is written by attorneys for attorneys, and that's your agent's job to help navigate and walk through that, because it can change company to company.
Although that's not the same kind of example, I don't mean to quibble, but see, like something like a bike or a car. Well, everyone knows to depreciate. Okay, but collectibles, guns, coins, art, and something like that, well, theoretically, if it's something that's of value, it should appreciate unless something dramatic happens. So they're not apples, right? So, I guess what you're really saying is that, if you felt it needed protection, like a extra policy, well then, I guess you'd probably have to get that assessed about every 2 years or something to make sure it was worth still paying.
Sure, and another option you can use too, to save yourself if you do just a little bit of market research and see, yeah, we're still in the ballpark. It's a good option, but it's the main point I would say to take away from that is a regular policy should definitely be in the cards. So one of the other items I wanted to touch on here, because it's something that also gets overlooked, is when there's a trust that comes into play. And if you have your home or other properties in a trust, there's an important thing that you don't want to overlook is how that might impact claim settlement again. So if we have the trust as the owner, but the policy is in you and your significant other's name without the trust listed, some companies can look at this as, well, we didn't have insurable interest. It was the trust that needed to insure this policy. And so it goes back to, again, they've overcomplicated the process, but we have to follow this again as agents to help navigate our clients along. And so it's one of the things that I would like to definitely point out, and the professional legal advice is going to be out of my realm here. Maybe Doug will field some questions later on, but I would definitely suggest to talk to financial and legal professionals about that situation, as well as your insurance agent. So.
If the house is in then premium needs to be paid from trust monies.
Not necessarily, but it needs to have the trust listed on it.
Oh, yeah, that's because I mean, as long as you get your money for the premium.
Right.
They don't care.
The company wants the money for the premium, but we need to make sure that we either have the trust listed as the named insured or as an additional named insured.
I mean, typically, legally, if it's in a trust, then policy is taken out.
Yes.
Okay, if you're in like a car accident, you are negligent, and somebody sues you, and you have your name in a trust, they can sue the trust.
They can, yes, but
If it's your personal trust?
Yep.
Yes.
So is it better not to put vehicles in the trust?
I would default that to a legal or financial. When it comes to trust, all we want to make sure that our policy correctly reflects how you have it listed. As far as the decision making and potential protection for your assets, I would have to rely on a professional. That is one, we've got to stay in our lanes here with the insurance side, and so as far as making that decision, the best protection would be, or best advice would be to work with a legal professional if you have one, but to make sure your agent knows that you have those assets in a trust. Right. Correctly. Mhm. I know it's an awful maze, isn't it? Well, and we'll try to, for time purposes, that we'll try to, I can share some additional information and resources afterwards as well, if anyone's interested just on some things that we have available. Again, I would say default to your trusted professionals there. Any questions? Yeah.
Yeah, because I'm curious. Mysterious disappearance.
Yes.
It just disappeared. You don't know it was stolen. If you misplaced it,
Exactly.
senility sets in. Those kind of okay.
That's exactly. And so here's a good example is whether, let's say someone's doing the dishes, set some jewelry up, and suddenly we have no clue where it went. Exactly. And so the importance of having
those items scheduled versus hoping that it's included in your policy, is it typically will cover that mysterious disappearance.
And so
And loss.
when my mom got into the later years, she had a caregiver and she was always assuming the caregiver took. She didn't issue when my mom would just tuck it. So just curious.
And an example, I played not too long ago where husband and wife were doing some renovations at the house, doing cleanup. And that day she could not find her wedding ring and she believes they swept it up in all the scraps and everything. And so they gave it a couple of weeks and eventually reported the claim. The insurance company in that case paid the limit that the jewelry was scheduled for and moved on.
Now, when it comes to auto insurance, a few years ago, we definitely saw a shift in our auto insurance with the attempt and hope to bring the costs down. Now, I avoid the political conversations on this, but I think some of the wrong people were in charge of trying to make this a success. And we didn't see the immediate savings because most people, what it did is it gave us options, right? Which is definitely beneficial, but from my experience, most people didn't choose to give up the coverage at that point. And so we didn't see as much of a reduction in premium that as consumers we would have liked to see. But with those changes, you have the option to select different bodily injury limits and different personal injury protection, or referred to as PIP. And let's say you would like a lower limit on one of these. If anyone's selected that on their own, you have to sign a form, acknowledge that you're going with a lower bodily injury or personal injury protection limit. And then you submit that to your company and everything is good. Just recently, go ahead. Well, right. And that's the other part is, it's almost turning into a trip to the casino. It's you're gambling on what potentially could happen there. And, again, my philosophy, but, insurance is in my blood, so it's hard to counter this, but I like to carry as much coverage as I can because it makes me feel much safer if something happens. One of the things that I wanted to point out, though, is just a recent court case that came through is if you do select lower limits, but that form isn't submitted either by your agent or by you by the time your policy renews, then you default to the state minimums. And so if you were looking for any changes there but didn't get the paperwork in time, you've got to wait until that paperwork is then received again. So now there was a question about the vehicle titling. And trusts aside, another example that we see is, let's say you've picked up a vehicle from a family member and it's essentially become your vehicle, but you've kept the title in their name. We see this very often, and it can be very
Personal injury protection is with those options of
being able to waive your personal injury protection and allow Medicare to take care of these auto-related accidents. You can save a significant amount of money, but and I'll share this afterwards as well. This little table shows where your auto insurance will pick up certain types of services and Medicare, for instance, will not. And so it's important when you're making those decisions just to evaluate how that might play out. And so again, I'll share this for sake of time, is to make sure that Medicare or your Medicare Advantage, depending, because they both have different coverage that they'll provide, how that will incorporate with your auto-related injuries. And so I would just, the takeaway here is make sure to ask your agent very detailed questions about how this is going to play out so you can weigh those options before you sign off. Again, we've talked about a lot of these coverage additions, but how can we save money? First, be a safe driver. I used to have a little bit of a lead foot. I've learned my lesson there years ago. And so keeping a clean driving record is going to be one of the biggest ways to do that. And not only with traffic violations, but claims as well. So if you've been claim free and you have your, you hit a deer, or you might lose a claim free discount, but no surcharge. But let's say you now have, I backed into my garage door, and then the next day, you hit somebody in the parking lot. Now they see at fault accidents, and you can start to get surcharged from an insurance company for a claim frequency. So the way we can navigate around that is, practicing a little safer driving. Obviously accidents happen. So that's what we're here for. But other ways to save on your auto insurance, how you're using your vehicle. Is this to and from work, or are you only driving a few thousand miles a year? Make sure that you have that conversation with your agent, because a pleasure use vehicle for 3,000 miles or less a year, or 5,000 miles or less a year, can help save your costs as well. We've got coverage options that you can choose, like we talked about. All of these can help control the premiums up and down. So the next piece here is on our umbrella insurance. Now, an umbrella is exactly that. It's going to help go over the liability that you have on your homeowners, maybe a watercraft policy and your auto policy. How do you determine what kind of umbrella you need? Well, we want to look at assets. What do you have, including pensions, other income streams, your other assets. Also, what are you doing in your personal life here? Do you have volunteer positions or board memberships that might open you up to other personal liability? These are all things to address with your umbrella, because if you do get sued for something that you're doing as a volunteer, it certainly happens, unfortunately. And it's nice to know that you have coverage there to protect you in that case. And I put in here just a general rule of thumb is to at least equal your net worth. We want to make sure that you can protect, so you don't face a lawsuit and have to liquidate any of your assets. All right. So I think we're all right. We're still doing all right on time, but we did hit the overdrive there for a little bit just to catch up. Oh no, we're good. And I want to make sure we keep some time here for any additional questions. But I've covered a lot on these topics here so far, but some general considerations when you're going through your insurance renewal, or don't wait till renewal time. Talk to your agent, next week if you've got some concerns here. But if you're going through a life change, whether it's a marriage or retirement or anything along these lines, it's important to make sure that your insurance follows you, because it's really not something you want to set and forget. I recall that from a good infomercial, but you don't want to just let your insurance continue to go on, because our life changes so drastically year to year. And from the examples we talked about with values on our home or values on our personal belongings, or even our personal assets, we need to make sure that we're adjusting with the current economic factors. Another area that we talk about with all of these coverage options, and we're trying to balance, do we overpay the insurance company every single year without claims, or can we maybe take a higher deductible and take advantage of those savings? We want to make sure that you feel comfortable with the decision that giving up a certain coverage or going with a higher deductible doesn't put you in a bad place afterwards. And so, I don't like to make any knee-jerk reactions when we do these types of things. Like I said, on my own insurance, I increased the deductible quite significantly because of the comfort level that I have. I'm not a contractor, but I can manage to get by some things at the house, whether it's tree removal, something like, repair some damage, some drywall. Might not look the best, but it's something that I can navigate around. So that was a comfort level for me. My wife might prefer that I don't delay those projects that long, but again, a conversation to have along the way. And get guidance. With all the options, the ability to buy insurance online, the convenience is great. The pricing is usually very good. But what we found is there's typically something missing when you see those prices drop much lower than what you might experience. And so to be diligent and work with a professional, make sure you ask your agent, or if you're going direct to a company online, make sure that you connect with somebody. I always say, save your communication records, whether it's an email. If they tell you that something is covered one way, would you mind sharing an email with, just to confirm that? Keep some of this documentation to help along the way. Oops. And we also talked about the trusts, which again, that part goes outside of my my pay grade with this, but rely on these professionals that you might have in your life, whether it's with your retirement or a CPA or a legal professional. If you've built a comfortable team, I always like to say that we should choose our insurance agents the same way we do our attorneys and our CPAs, that you want to build a relationship with somebody that will follow you along with your life changes and can really get a holistic view of everything. So I know we accelerated there a little bit. I want to make sure that I didn't leave any unanswered questions. So with that, do we have anything that came to mind along the way?
Did we?
Under the umbrella insurance, you put focus on retirement savings protection. I didn't really understand what kind of protection you were on.
Good question. So the way that, or what that's referring to is, let's say, you've got a boat and you go out with the family, and God forbid, hit somebody in the wall. The reason I say a boat is that's one of the areas that we see some of the highest claim amounts that typically lack the coverage that's needed. So in this case, again, worst case scenario, somebody's killed. Well, you could be sued for their potential future earnings, well beyond maybe the $100,000 or $300,000 or $500,000 liability limits you have on your watercraft policy. So
With so the boat would be insured, you're saying, with those limits.
right, and so then with an umbrella, let's say we'll just use flat amounts. You're sued for 1.5 million. Your watercraft policy had 500,000. Without an umbrella to go over top of that, you're gonna have to come up with another millions. So they're going to hit your savings, retirement, other assets until we can fulfill that. So an umbrella can help.
It protects the time that voting.
Exactly. Good question. You've had a lot of good questions here. Anything else that comes to mind?
Thank you.
Yeah, I appreciate the opportunity here. It was a lot of fun. I always, like I said, insurance is in my blood. So anytime I get a chance to talk about it, we try not to get down in the weeds too much, but ultimately it's something to have a good conversation with. And if anyone has questions afterwards, feel free to email them over to me.
We can help answer some things as well. For the Medicare and personal, yes. So I'll get that sent out to. Is it best to just email it over to you to get out to everybody then, or will I have everyone's email address?
I missed the question.
So if I have some additional documents to share, he had mentioned the Medicare and personal injury protection table. Should I just email that to one person and get it out to everybody?
Okay.
Gotcha.
There's the answer.
There we go. That sounds good.
Keep the attendance level.
I was wondering, can you make a couple of comments about uninsured and underinsured floors coverage? Because from my understanding that the state law requires a certain level of coverage, so could you just kind of mention a couple things about if somebody hits you with low insurance or just?
Yeah, very, very good question. And that's something, in theory, it might seem silly almost. You're insuring for other drivers out there that didn't choose to purchase enough coverage. So even though there's state minimums, that might not pay in the event that you're injured or, I'll give you an example here in just a second, but the other issue that comes out of this is partially due to the costs of our auto insurance in Michigan. We have a lot of uninsured drivers. And so if you're hit and left without a way to take care of yourself, that uninsured, underinsured coverage that you pay for, your policy will pay you for those injuries and complications from that claim. So example, that we've seen is, father and son driving in the same vehicle, got in an accident. And the son carried lower limits than father, and so in order to account for changes in his house, he was unable to work for an extended period of time. He made a claim on his own policy for underinsured driver, his. So it's, that situation was messy to say the least, but it was a good illustration of how your policy can come up into help alleviate financial strain. Good question. Did that help?
Yeah, it does, that was, what our legislation was enacted because people said they're gonna make it. And the problem with that, of course, is what happens if you have a.
Right.
So, so that's basically everyone pays into it to protect against those instances. The person responds to it is that issue, is that the idea?
Exactly, and it's to make sure that, let's say you are injured and that person is uninsured, carried the very lowest limits, then what we would see is you don't want to have to wait to litigate that and try to go after somebody who already was paying their auto insurance. Most likely doesn't have to any means to compensate you anyways, and so it's another layer of protection there to make sure that you're made as whole as we can. Obviously, health is something that.
But are those limits the same as the limits you're carrying in the area? It's a higher amount of coverage, then does it revert back to that, or do they have a different scale that's lower?
So you can select your uninsured, underinsured limits. You can only get them as high as bodily injury limits if you request it. So if you take $500,000 limits, you can get up to $500,000 on the uninsured limit.
Or why would you not?
That's
That
great.
makes sense to me to have low uninsured.
And that's what we always say too, especially when you look at the premium breakdown, that particular area is one of the lowest costs of your auto. Is the uninsured, underinsured. So my suggestion is always hold the edge. Okay.
All right, well, thanks, Tyler.
Yeah, thank you guys. Appreciate it.